Hello, everyone, and welcome back. Today, we're going to be doing a live analysis of the Australian dollar versus the US dollar. We're going to be trying to understand the price, the action market, and we're going to try to determine which strategies are best to use when trading. We're going to go through the process on how I work, which indicators to use, etc. So, let's begin. The first thing we notice, this is the daily chart of the Australian dollar versus the US dollar. This is the day here. See, so the first thing we notice that the price of the market is actually looking bearish right now. The price is actually trending in a downward channel. Here we go. We can line the channel like this. That's the channel. So that's the first thing that I like to look at is which way the market is actually heading. Like, is it going up? Is it going down? Because that gives us a lot of information on how to trade. So the second thing that I like to look at is support and resistance area in different scenarios. So let's assume the market is gonna be changing back up. So it's going to be bouncing back up. So the first thing I like to look at is resistance line. See where they at and see if the market actually reaches that resistance area, what will happen. So let's start identifying those. So here we go. Let's got a so the price right now is here. So the first resistance line will be around here. So around the 0.73. Let's put these in red because they are resistance. Okay. So the price right now at 0.73, the first resistance line is at 0.739. So what we know basically, if the market actually jump back up and hitting this resistance line, so there's two outcomes for that. If it breaches it, that means the resistance line has been broken and the market is more likely to actually keep going up. If it bounced back, that means that the bears actually still holds control over the market and the price will actually drop even more. If we take the first scenario where actually the price of the pair actually broke the first resistance line, then it's headed to a second resistance line, which is we can see here. Like if you're looking at the chart in general, like we can see the second resistance line should be around here where the bounce happened in the market. So if the first breach happened, then the price will most likely go back up to 0.748 here around here, 0.79. And the same thing is going to happen again. This line is going to be tested by the bears and by the bulls' power to see who holds control over the market. Continuing even more, I always like to set three resistance line, three support line. That's just a rule that I follow. Is way better. So we have a minor resistance line here, but this is the better resistance line here. So this is what's going to happen if the price actually started moving up. Let me grab my brush. So let's say the price actually started doing this. So it hold here. So there's going to be a battle between the bears and the bulls. And the outcome of the battle will determine the market direction. So if the bears, for instance, won, the price will go down like this. If the bulls won, then the price will keep probably going up like this, and it's gonna hit the second resistance line here. Then a second battle will occur, and the outcome will also determine which way the market is probably gonna be going. If the bears won, the price will go down. Now, when the price go down, it's going to be tested on this line again, but this is going to be a support line this time because always remember, support line can always change to resistance, and resistance can always change to support. It's going to be tested here if the market actually, if the bears also won, like it's going to continue and going down. The bulls won, it's going to go up. So let's go back to the second point here. If this market also turns out that the bulls actually was able to get control, then the price will probably go even more up and going to be tested on this line here. So we could be seeing a reversal here. This is all that we're talking right now is scenarios. We haven't actually analyzed the market yet on all the different indicators. This is just talking about support and resistance. What would happen if the price moved there? So like for instance, if the price moved here and it's closed above this resistance line, then it's a buy signal because it tells us that actually bull were able to gain control over the price. So at least the market will be pushing up to this area. So it's a good buying opportunity. It's basically how we trade breakouts. I made a video about it, how to trade breakouts. Check it out on my channel. It will help you a lot to understand that strategy. So looking if the market actually continues. Let me just remove all of this. Control Z, Control Z, Control Z. Here we go. Okay, but let's try to understand if the market actually continues its bearish movement and where it could be headed. So let's start with new line, and I'm gonna make it green. Okay, I'm gonna delete it. Okay, here we go. So the price is currently around here. It's running between this downward channel. So the first support line that we see is actually around this area. So the price would be going down, and there's going to be a battle there. We're going to determine the market direction. It's going to be up or down. So, but most of the people look at the price and they only see like the last 10 candles or 20 candles or something like that. You cannot do that, and especially on charts like that. So, like if you're looking at the chart like this, okay, this is the first support line. So because we can determine where the support line because of the length of the shadow of the candle here. But after that, there's no indicators how to determine the support line. So this is where we look back at the market and see all the support line and use and reuse them. So basically, this is the first support line. If you look in here, the second support line should be around here. The third support line actually should be around. If you're looking at this, it's a huge drop here. Yeah, it's around here. So this is how you determine the support and resistance line in general. And we're gonna have three different scenarios as well. As you can all tell, like the market will be dropping down here. There's going to be a battle. It's going to determine the movement of the market. Is it going to bounce back up, or is it going to actually cross? Then it's going to be around here. Then there's going to be a battle for control between bears and bulls. It's going to go back up, or is it going to go down, and etc. and etc. That's the first thing that we look at. The second thing, hold on, let me remove all of this. So the second thing we look at is the indicators now to determine if actually the market is bearish or bullish. So the first thing that I like to do is moving average indicator with exponential moving average indicators. I have a video about these as well if you need to understand how they work. So the first thing that we see here, I'm gonna move this. Sorry about that. Okay. So here we go. This is the moving average. This is the exponential moving average. So we notice that the market is moving below these moving averages. This is kind of a bullish sign because it tells us that the price of the pair right now is actually below the average, the 10-day average. Oh, you can see here 9 days, but even if we put it at 10 and we put this at 10, we can see that the market is actually trending below the moving average. This is our first bearish sign. Uh, let's add more indicator and see how they work. The first one that I always like to add is the relative strength index because it shows the strength of the market. So looking at the relative strength index, we can see it's actually quite low. It's at the 35 ranges. It could actually go down and drop to the oversold zone, which is a huge bearish sign. Like it's showing that the market is currently weak and it's not looking that like the bulls might have any control at all in the next couple of days. So this is the first one. Let's look at divergences. This is the better way to use this indicator. So looking at divergences, let me see here. So this is the higher high. So the first thing that we can tell, there's a small divergence here, as you can see here. Oh, sorry. Delete this. We have. So as you can see, we are having lower highs. But if we look at the indicator here, we're currently having kind of a higher high. It's not a huge divergence, but it is a small one. It could be a sign of reversal, or it could be something there. Now let's add more indicators. Let's remove the RSI and let's add, for instance, the moving average convergence divergence. The moving average convergence divergence basically shows us the momentum of the market. How much movement is it gaining? Is it in a positive movement way or is it a negative movement way? So the first thing that we notice, this is the negative move and this is the start of a positive move here. So looking at this, we can see a positive crossover happening in the MACD, but the movement is still in 0.3012. It's always showing a small momentum in the market right now. But the positive, that could mean that the market could actually be heading up a little bit, maybe like reaching here and continuing his bearish movement down. Let's add another one, just determine something else. Let's add the ADX with the DIs. So the ADX basically it shows us if the market is trending or not, with indication of bullish and bearish indicators. So let me see. So as you all know, the ADX, if it's above 20, that means the market is actually currently trending. So the ADX is right now is sitting at 43.21, which shows us that the market is currently actually very good. Like it's trending right now. Doesn't mean it's going bearish, it's going bullish. It only means that it's actually trending. So the second thing we look at in this indicator is the DI minus and the DI plus. We can see there is a negative crossover. A negative crossover means that the DI minus is above the DI plus, which is also a very bearish sign. So that's how I usually determine how the market is going to be moving. Now, to identify the price and like it's using stop loss, etc., I like to use the average true range indicator. So the average true range indicator daily is 0.00602. What does that mean basically? Basically means every day the average movement of the market is around 60 pips. I'm gonna be making a video about the average true range because a lot of people did ask me about it and how to use it with stop loss and etc. So 60 pips. Let's talk about this for a second. Let's say the price is currently 0.73573. So 60 pip would mean that the market would probably jump around 60 pip up and 60 pip down. Now, let's say we want to calculate our risk to win ratio at 2 to 1, right? So we want to lose 60 pip, but we want to win 120 pip. And that's how you determine basically. Like, let me show you. Let me go with a short position here. All right, so we're looking at the market. It seems to be bearish. So this is the current price at 1 to 1. See, risk reward ratio is 1 to 1. So we add 60 pip using the ruler here. So 60 pip, it's 0.60. So it's going to be around, roughly around here. Okay, this is the 60 pip. Okay, so this is how you understand how the market could be moving. So we have 60 pip ups and we have 120 pips down. Okay, that's where we want to take our profit. So we have the stop loss around 60 pips. So for instance, if the price of the market actually started going like this up, we have 60 pips to move on and drop down. And here is like where we cash our trade. Basically we can cash here, we can cash here. It's determined on you, but this basically will help you minimize your risk while trading. And that's it for today. Thank you all for watching. If you like the content, please like and follow, and I'll see you guys next time.